Hello, welcome to the Solid as a Stock session. Of course, we're going to be going through some stock trades today. I'm just going to put the disclaimers up there on the top left side, so even if you need to pause to do that. Now, before we get into some stock trades, which by the way, we're going to go through trades that we've placed before in past sessions to see how they've done, how we would have managed them. Did we win? Did we lose? Did we break even? Why might we have got involved or closed out early or something like that? And explain the reason behind it. And then we'll look at new trades that we can put on, new opportunities that might be there in the markets. Before we do that, just want to show you where you can go for support if you have questions or if you need help with any resources or anything like that. So in terms of questions, my email address there, which is becky@tradewithufos.com. There's also support@tradewithufos.com, so you can email us on that as well. You'll just link here, tradewithufos.com/Becky. From that link, you'll get different platforms and apps that you can go directly to get. You can put one-on-one coaching link, and if you scroll down, you'll see there's a place that's got a bunch of questions, kind of frequently asked questions section, questions and the answers. So you might find the answer to your question here already. If not, you can look for free and answer the question yourself. So different places to go for different types of support. Of course, always here to help, always happy to help. So let's have a look that we placed last time in previous sessions. This one was placed all the way back in January. So I'm going to go through, I've got my little list, so I'll go through them one by one so we can see and keep up with all of the trades that we have outstanding. Now, for those of you that have joined me on sessions before, hopefully this helps to put into context the trades that we've placed before, so that you know what happened with them if you haven't been tracking them yourselves. But even for those of you where this might be the first stock session you've been on with me, with us, hopefully what it does is it helps to give you understanding of how you can manage your trades, which is equally as important as placing trades in the first place and doing the methodology in the first place. So let me just get rid of the box, so I don't need that. So let's have a look at this is AJRT Aerojet Holdings. This one is very simple. We went at the back in January, took our first target at the green line, so we took 50% of our position off at the green line, and we're still on our way down to this second green line. If the price continues to go down and we hit the second green line, then we take our full profit. If there's much more against us, then likely what will happen is the climate will change. Those of you that follow the methodology will know what I mean. Those of you that don't know anything, hopefully it will make sense after the session. The climate will change. If the climate changes, then we will close out the trade at market when we see the climate has changed. So it's very likely that this trade will end up in some way a profit, either a small profit or our full profit, a minimum profitable. The only way that wouldn't happen is if we saw a gap up and it gaps, price gap beyond our stop loss and we filled at that point, and perhaps we might lose in that case, but it's got a gap by quite a bit for that to happen. So more than likely this trade will end in some form of profit. Now the market PIMW, Primo Water, PIMW. Okay. So with this one again, very simple. We're all in the trade. We hit the first target on our way to the target. We got in at the black line. Our stop loss was here. We're still here for our second half of the trade. We hit the first target, the green line, on our way to the second. Price continues on and hits the second line. We take our full profit. If it moves against us quickly, based on where the EMA is, it might be that we get stopped out for the second half of the trade, in which case the trade is then break even. We don't win, we don't lose, we lost what we just won, so break even trade. Or likely, price moves against us slowly, we'll close out early and therefore take the trade at a slight profit. But we will see how that one pans out. PPEI is the next one. The ticker symbol here. Of course, you can read the names of the companies themselves as well. So with PPBI, we have same situation happen with this trade? Price could move against us, currently price is here. Price could move against us and stop us out. That could happen. Price could move against us, the climate changes, and we close out of the trade, and probably a slight loss. Price could continue moving down and hit our targets, one other or both. Or could either be the safety target or the safety and the final target. So then we'll see how that goes, but for the moment, nothing to do here, leaving this to play out. Let's have a look at OHI. Okay, so with this one, again, for those of you that haven't joined OHI, this is where we can start to learn about where we do things in order to protect ourselves, where we might manage the trade if something goes off plan. So we placed the trade, I think it was back on the 11th of February, I've got on my list. So on the 11th of February, we placed this trade. At the time when the trade entered, everything was lining up. We had a thick red dot, which is auto climate, this acts way of telling us probability down. Our EMA value was inside our UFO. Again, if you don't know what I'm saying, don't worry, we'll get to it. Basically, everything was lining up for us to take this trade. Price then moved in our favour, didn't quite hit our safety target, and slowly started to move back against us recently by quite a bit. So we would have now cancelled out, and I'll tell you exactly when we would do that. So on the 21st of March is when the climate change, so it would have been a Monday, this Monday just gone. So on the 21st of March, if you're checking the trades, which I would suggest you do, even if you just check in every day for a couple of minutes just to see what's happening. So at some point on the 21st of March, let's assume we would have checked in on this trade. On that day, just to highlight so it's easier to see, that was this candle here. Now, you could have, by luck, the candle opened and closed roughly about the same price, which would have been at a tiny profit, a couple of dollars maybe. So with that tiny profit, you could have done that if you'd closed trade towards the start of the day or towards the end of the day. You might have had bad luck, and you might have happened to look at this and close out the trade at the high of the day, in which case it would have been a slight loss. So somewhere around break even, right? Either a tiny loss or a tiny profit would have happened by the time we cancelled out this trade. So the purposes of the average is let's call it break even. So this trade broke even. You either got out at a profit or at a slight loss, call it somewhere in the middle. So that's what we have with OHI. So, okay, let me just put the note in there. So MITK. So keep a log. I would recommend that you guys keep logs of your trades. Obviously, want to keep track of what's going on and what you're doing and why. Okay, so this one, similar thing to what we've seen before. We entered on the black line, moved in our favour. We got out at our safety target. Still waiting for price to come down and hit our final target. No reason to cancel out the trade or do anything differently today. So we'll keep that as it is. So, you know, this is a long list, guys. I know some people join these videos to look at the new stuff, give me opportunities I can look at right now. So by all means, if you're watching the recording, skip ahead, past this part if you want to get to that point. Hopefully, though, what this is doing is giving you context as to how we manage trades. It's really important. Okay, so this one is CNO. We also would have cancelled out this trade most probably on the 21st. So let's have a look. You see the importance of managing trades. So if I was to show you on the 21st of March, so this Monday, so similar thing with CNO as we've seen with OHI. On the 21st, the climate changed. So we should have been the trade. On the 21st, we had this candle here. Actually, if I highlight over it, I'll see if I just do that. We had this candle here. So you could have got out at the low of the day and got out at basically break even. You could have got out at the high of the day and got out at a small loss, or somewhere between a break even and a small loss. That could have been the result for you if you closed out on the 21st of March. If you don't look at it and you check in once in a while when you fancy it, it's gone further against us. Which means if you were to close out now, you're looking at taking half of your initially found loss. half of your loss is still better than taking a full loss, of course. Wouldn't it be better to take 10% loss, or 5%, or 20%, rather than 100%, 50%, or greater? So this is why we manage our trades. This is why we check in. This is why we have rules to protect us, so that we can get out where the price is a little bit against us, not a lot against us. So this one we should have closed out again at a very small loss. Let's have a look at Flex. Next one. Okay, so similar thing here, although this one would have been a slight profit overall. Reason for that is that we got in at the back line, price went in our favour, hit our safety target. So we made half of our trade. If we were risking $100 in total, we've now made 50. If we were risking $10 in total, we've now made 5. If we were risking $1 million in total, we've now made 5. We made half of what we were risking. Then the price started to move against us, and similarly, it looks like here on the 21st, although we check to see exactly which day. Yeah, on the 21st of March, this market started to move against us, and the climate changed. Now, the 21st of March was this candle here. So that would be about, call it, depending on when we got in or out in that day. I'm just going to highlight it so we can see it a little bit better. You could have got out at the low of the day, you could have got out at the high of the day, anywhere in between. Let's assume that you got out at about 30% of your overall risk. That means you made 50% and then you lost 30%. Overall, you're up 20% of your initial risk. So if you're risking $100 maybe on this trade, you made 20%. Yeah, do the math there in my head. So you made a small profit on this trade, even if you haven't done anything until now, and you closed out right now, same kind of situation, you would be getting out somewhere amongst this kind of loss. So you would be overall with a small profit with this trade. So that's okay. Still a few to go. So again, I know people want to get on to showing you trades, but we need to make sure that we go through into the context and to explain how we do things. So with this one, very simple. We are still waiting for this to hit our second target. We've hit our first target, not yet hit the second, still in and waiting. That's easy. EVRI. With this one, we would have entered the trade, and similarly, it looks like the 21st, although I can check, to be specific. Yeah, it was the 21st of March. We would have got out of this trade at a small loss. So the 21st of March was this candle here. So again, you might have got out at the high of the day or at the low of the day, somewhere in between. Either way, you lost something, but you lost less than what you were risking in total anyway. So you would again cancel trade and get out of it for a very small loss. Alton, if you will see. This one is Lynn. We've hit our entry, moved down, hit our safety target. Great. Price is moving against us a little bit now, but not yet. Everything is still in hand with this. GBCI, 3 more to go. Then we'll move on to looking at some new opportunities. GBCI, similar thing, hit our entry, hit our safety target. It will be quite a way until we get our second target. But at the moment, price is still moving in our favour. There is no need to do anything to cancel this that we see here. GBDC. Okay, this one we will cancel this trade entirely. We haven't got in it at all, haven't been triggered on our entry with this one. We no longer have things lining up in our favour. Let me explain why. We place the trade for a variety of reasons. We have to hit a few things on our list in order for us to place this trade. So we placed it back when we had a red dot, probability was down. We had the EMA, that blue line, within our UFO that we would have used, which is where we can see where that UFO would have showed us between the black and red lines. So we had those things lining up. Now, we still have a thick red dot, but the EMA value is no longer inside our UFO. If it's no longer inside our UFO, then it doesn't tick one of the things on the checklist. Basically, it means we have less probability that this works out for us. Now, as price moves up, so too will the EMA. It may be that they coincide just inside this UFO, we still have a thick red dot. I doubt it. I would say we should cancel it and keep an eye on it. If it works out in the future that it does happen to go that way, then great, but for the time being, we cancel this trade. Last but not least, which is the last trade we put on last time, MFC. So at first glance, this looks like it was a losing trade. However, this is actually a fully profitable trade where we found our second targets. Now that's because our first targets were very close to each other. Our first target is always 1-to-1 away. Make half of what we're risking. That way, if we then lose the other half, it breaks even. The second target is usually further away based on where we see we have room to take the trade. And we put that pretty much exactly where price showed us it had room to go. So we essentially made just over 1-to-1 on this trade. Price came in, hit the backline, hit our entry, moved out almost immediately. Here, hit both of our targets, and then moved against us, but it doesn't matter. We're already out of the trade, already taken our profit. Hopefully what this goes to show is that this is why we use our methodology that we use in order to figure out where our second target should be. We don't place it where we want it to be. We place it where we have objective evidence that we have room to take it there. And that's exactly what happened. Price moved to where we had room to take it and then moved against us. So we got out just as we should have, just in the right place. Always try to do that and keep the structure there. Okay, so we have seen a variety of different trades now. We've spent quite a bit of time going through trades that we've already placed. Some that we cancelled before we even got into them. Some that we have broken even on. Some that we've taken small profits. Some with full losses. Some that we've taken small losses. Some that we've taken full profits. So hopefully a range there of what can happen in a trade and what we might do to limit those losses, what we might do to lock in those profits. So hopefully that gives you context there. Now, let's have a look at some new trades. Before we do that, let's just have a look at the weekly economic calendar for the US markets, because we're going to be looking at US stocks. Now, for US markets, we have news coming out on Wednesday. So bear in mind any trades that we've got today by Wednesday at GMT. So this will be after we've changed the clock, so 5 hours before that, so 17 at 7:30 a.m. Eastern time. We'll have some news coming up that may affect US markets, so of course may affect the trades that we place. And on Friday, the 1st of April, again, so it'll be 7:30 in the morning, and then what would that be? 9 a.m. Then we will see some news coming out on Friday that could affect our trade. So bear that in mind. Be aware you might want to close your trades out before that time. You might want to reduce your risk or close out some of your position. You might ignore it entirely, but whatever you do, just be aware of it and decide from there. Okay. So let's now come to look at where we can have some new trading opportunities. So with this in mind, so just checking for the chat box there if anyone's got any questions or anything, but I can't see any. I should have said, by the way, anybody watching live, by all means, please ask me questions. I'm here to help, here to make everything make sense to you guys. Even if it's, can you go quicker on that? Can you re-explain it? Can you go through this topic, that topic, whatever? Okay, so before we look for individual trades, what I'd like to do is have a look at what the market as a whole is doing. We're looking at US stocks, so we are now looking at the moment of an index of US stocks. This happens to be the continuous futures contract, the ES, which is the representation of the S&P 500, which is the top 500 US stocks. If you've never traded stocks before and you have no idea what I just said, we're basically looking at a representation of the US stock market right now. Now, on a weekly chart, which is what we're going to use predominantly for our decision making, on a weekly chart, if I just make this a little bit wider there so we can see it. On a weekly chart, we see that the climate is showing us a thin dot. For those that don't know what autoclimate is, essentially, if we have a thick blue dot, that tells us probabilities upwards, therefore we buy. See what I mean about using this one to help us with our decision making. If it's a thick red dot, then probability is down, therefore we look to sell. So again, helping us with our decision. If we have a thin dot of either colour, then that tells us not enough probability in either direction, don't do anything. Now, this doesn't mean just because the US stock market as a whole is undecided on a weekly chart, that doesn't mean that every single stock within it will be that. We'll look for stocks that have probability either up or down so that we can place trades that have probability with that individual stock. The reason I look at the market as a whole to start with is because if the market as a whole is coming down, for example, and we then look for individual stocks that are coming down, we know that they have at least one thing in their favour, which is correlation. They're doing what the stocks within the whole market will make the whole market go up or down, and the whole market will influence what individual stocks do as well. So you don't have to trade where you have correlation. It's not one of our fixed rules, but it helps. It just puts an extra bit of probability in your favour. So I like to start with that, just to help guide us whether we look for long opportunities or short opportunities. Considering it's a thin dot, no probabilities either way. The last few weeks we've looked at short opportunities because we've had probability down. So today, let's look at probability upwards and look for long opportunities. So I'm going to come to our matrix on top. By the way, the platform I'm using is Top Predictive Options Planner. You can get it yourself. You can get it from tradewithufos.com/Becky. If you don't want to use Top, or you already use that you're comfortable with, no problem. You can program these kind of scans into brokers like TradeStation that will show you similar results and allow you to program similar criteria. Now, let's have a look. So I am looking at, just to be a little bit quicker on this, idea I want to be looking for is I want to exclude trades or exclude stocks from my scan that have earnings coming out within the days. I want to do that because earnings can, of course, affect the price of a stock, and I don't want to be caught on the wrong side of that. So I don't want to be trading a stock that has earnings within the next 5 days. Hopefully, then gives us time to have a look at our trades once we put them in and to see what's happening after a week. I want a weekly chart to be confirmed up, sensible in the 9 EMA. What I mean by sensible is I want to be looking at stocks that have just started their move to the upside, meaning they are likely to keep going. If we look at stocks that have been going up and up and up and up and up and up for weeks and weeks, months and months, then they're more likely overextended or overpriced. We don't want to do that. So we want to be looking at opportunities that are sensible. Near the 9 EMA, because the 9 EMA is one of the things that guides where we trade, where we're placing our trades, where we're placing our buy and sell orders. So I want to look at stocks that are close to their 9 EMA value on the weekly chart, because it saves me looking at opportunities that don't have the probability that we want. So scanning with all of these things in mind, I've ended up with quite a big list. Now, what I might try and do is, maybe let's say we want it to be early. Let's be more strict and see if we still get quite a big list. Okay, we'll go with this list. So I am going to filter by the symbol. We'll go alphabetically top to bottom, and I'm literally just going to click through. On the first one or two, I'll explain the process as to why I'm looking for certain things and what I'm looking for. After that, we'll just smash through them, click as many as we can to place trades that show us probability. Okay, so things first, time frames. We are using a weekly on the left-hand side. This is the chart that's going to help us with our decision making and with our finding the right places to buy and sell. We're going to use auto climate on this chart on the left-hand side, and we're going to use the EMA, exponential moving average, the 9-point EMA. Those are the two tools that we're going to be using here on the left-hand side. Later on in our methodology, we will also use our UFOs here, but we'll get to that. On the right-hand side, I'm going to be looking at a range of time frames. So let's start with a 3-day chart. So we're going to go 3-day, 2-day, 1 day, 3-day, 2-day, 1 day, and a 144 minute. A lot of them tend to be Fibonacci numbers. Now, why am I looking at different time frames? Because if the left-hand side tells me, in this case, I should be selling, I don't know why that's saying selling, because I wanted probability upwards. So let me just double check that. Supplement confirmed up. There we go, confirmed up. Smaller list, brilliant. Okay. So if the left-hand side is telling me I should be buying, so it's a thick blue dot, I should be buying, then the question should be, where should I be buying? Where do I have probabilities that it's going to work out for me? This is where our UFOs to play. Our UFOs show us where buyers and sellers are. If we're buying, we want to buy with lots of buyers, because the more buying goes on, the more likely prices to go up. If we're selling, then we want to sell with lots of sellers, because the more it goes on, the more likely it is the price comes down. Now, which UFO do we pick? The one that has the EMA number in it. Because at the EMA price, you find buyers and sellers. If price is above the EMA and comes down, people buy. If price is below the EMA and comes up, people sell. So if price is above the EMA, which it would be in this case, or in this case, it's specifically at the EMA price, then what we see there is that we would have buyers coming in at that EMA price. So if buyers are coming in at the EMA price, also within a bunch of buyers that are also there, in the context of a client that's going upwards, probability, probability, probability. That's why we use it this way. So we're going to look at the 3-day chart, the 2-day chart, the 1-day chart, and 144 to find the best answer. Now, we see automatically that where price is right now, which is also where the EMA value is, we have a UFO that we can use. Now, the issue with this on a 3-day chart, we might still place the trade, is that we have loads of UFOs back to back to back. We would need to combine all of them, because that's a big stacks and stacks of buyers next to each other. We don't want to be selling out and having our stop loss in the middle of a bunch of buyers. So we would have to make sure our stop loss is below them. So our entry would be at current price, wherever that is. So 112.22, our stop loss would be down here. Now, what I'm going to try and do is look to see if we can get a slightly smaller area where we can find probabilities where we're not going to be doing that. And what we're also going to be looking at is this number up here. Without explaining it in very much depth, that number essentially shows us the probability rate of these UFOs. We want that number to be above 50%. The bigger the number, the better. So on a 2-day, we have a higher probability rate, but we have no UFOs that we can use. On a 1-day, we have, unfortunately, we don't have a UFO that we can use, only because the EMA number is 112.31. So it's close, but it's not where we're at, not what we want to be doing. 144. 144 is showing us sellers. So what we'll do is we'll go back to the 3-day, which we know fits our criteria of having over 50% there. Just going to take a quick peek and see if we've got any sellers in the way. We don't, so we will place this trade. I don't necessarily like that it's a wide risk. It means you're going to have, I mean, you can have less shares, which is great, but it just means that your targets are then further away. But it fits our criteria, so we will place this trade. Now the entry for it, let me just bring it up on my spreadsheet so I can write it in. Today is the 25th of March, 2022. We are looking at AN, which is AutoNation Incorporated. We've got weekly and 3-day. We're going long. The entry will be current price. We're going to go in at market on this trade because we're already inside the UFO. No point buying it as it gets more expensive. We might as well buy it a little bit cheaper. So that's what we're going to do. Our stop loss will be taking this UFO here, the bottom number, so 88.32, and we're going to take off 10 cents, give us a little bit of wiggle room. So 88.22. So again, very wide. You're looking at what, $14 of risk? So very wide. Our final target is going to be a trailing stop, meaning as price moves in our favor, if it moves in our favor, we will trail our stop behind UFOs. Our first target we will figure out now. So we are looking at AN. Okay. So I like to use TradingView to do the calculations because TradingView are very good at that. and we will just find this area here. Again, it's going to be wider than that because we're looking at an entry price of current price, which is now 112.37, which is where current price is now. Our stop loss was 88.22. So yeah, I think I did the maths wrong earlier. That's quite a wide zone, but let's have a look. Yeah, we're looking at $24 of risk between top to bottom. So let's say you're risking $50 per trade, well, you can only trade 2 shares. Okay, so we are going to do a $50 risk. Our first profit target is going to be a 1-to-1 away. So in this case, it's going to be 136.36. And that's because TradeStation has helped me with the maths there to figure that out. 136.36. Great. So that is our first target. We would also scroll down and make sure that we are on a good till cancelled. Although I can't find it to scroll down to, but you would check that you're on a good till cancelled. Check that everything is where it should be. Notice how because we're going in at market, price has changed, which means our risk has changed. So it's actually 136.54. I'm going to do it real quick so everything's lining up there. So there we go. So our entry in the end became 112.29. That's where we got in the end. Okay, there we go. So that's where we got in. Current price is now slightly moving in our favor. So great. We'll see how that works out. I'm going to put a little note on here so we know for next time. So placed on the 25th of March, 1 week, 3 days. And we did a target 2 was a trailing stop. So in order to have a trailing stop, all we do is we go in at market. So same entry price, same stop loss price, same risk. That's rounded it down to the amount of units it needs to be. You can put $50 in again, but it'll round it down again. And then you just click buy. In this case, we wouldn't have a second target on. So there we go. That's our first trade of the day. Now let's move back and have a look at our options here. And we will look for new trades and we'll be a bit quicker about it. Hopefully find a good one. So the EMA price is 243.61. Caused nothing on our 3-day chart here. 2-day, 1 day, 144, 243.61. Brilliant. Okay. Oh, it's 0.61, not 16. So our EMA price is too far away. So our EMA price is here. Obviously, the UFO is here. Those are not combining. So unfortunately, no trade, even across the 4 different time frames. By the way, you can use other time frames for the lower time frame as well. It doesn't have to be the ones I look at. 126.20. The reason I use different time frames is because all I'm looking for is a decent opportunity to get in, as long as on the right hand side it's a smaller time frame that's on the left hand side and it's not too far away. So you don't want to use a weekly on the left and a 10-minute on the right. It's too far away. But I'm using a few time frames within a range. You could look at the 2 hour, the 3 hour, the 4 hour, the 6 hour, whatever. Look at what you want. I just don't want to be cycling through so many different time frames per stock. So that's why I'm not necessarily doing it. Okay, nothing there, and nothing there. Nothing there, unfortunately. Again, our EMA price in this case is not lining up with our UFOs. This one would need a UFO at current price, so let's have a look and see. Nothing there. I know I'm going quickly. I'm doing that because I want to try and get to opportunities where I can actually show you placing the trade and why we're placing it. If I don't find anything quickly, I'll move on. If we get to the end of the list, we can then be a little bit more lax on our criteria so we can see more opportunities. 37.53. Okay, nothing there, nothing there, nothing there, and nothing there. Okay, 40.86. Nothing there, nothing there, Nothing there. Again, all I'm doing is looking for UFOs on the right-hand side, green UFOs on the right-hand side, that coincide with this value. So this value is 27.46. That's where the EMA is at right now. So the closest UFO here starts at 26.35. So it's a good dollar and a bit away. So I'm just looking to find UFOs that coincide with that number. If it doesn't coincide, move on to the next time frame. If I get to the end of my time frame list, I'll move on to the next stop. So 25.79, close but no cigar, as they say. Nope. Okay. So this one would need a UFO where we are now, which is 57.10-ish. Nothing there. Again, like I said, if we get to the end of the list, we can then be a little bit more lax on the criteria that we're using for the scan. That doesn't mean that we break rules. That's not what we do. It's that essentially the rules say, brilliant, we've got an opportunity there, although it doesn't fit our criteria there. Okay, let me come back to explain that. So just to finish the point I was making then, when we change the criteria on our scan, all we're doing is we're tightening or loosening the strictness of the application of the rules. What I mean by that is the rules as we set them out, and of course rules can be changed and can be manipulated, and it's up to you what you do with your trading. Even within the same group of traders that follow the same methodology, there's probably going to be differences in the application based on risk tolerance, based on time that they have available and things like that. So we are currently looking at where we have stocks that have just started their move to the upside early. That's why we're seeing one thick blue dot. Now, as long as we are trading stocks that have probability to the upside at all, then we're following the rules, even if they've been going to the upside for 20 odd candles. Now, the longer they've been going to the upside, the less probability we have. So we've started out being very, very strict to say we only want them to have one candle to the upside, because that gives us more probability that it's got room to go up. But we'll start to sort of go more lax on that. That's a personal choice, not a set rule in this methodology. Now, I'll just explain why this trade we won't take, even though it does look like it's lining up. So we have a thick blue dot. We have the EMA number at 71.42, which is around here. It's within our UFO that's right there. You'd think tick, tick, tick. Unfortunately, the probability rate of this time frame, this market, is 45%. To be honest, again, that's personal choice. You might say, I'm fine if it says 30% because my reward to risk ratio counterbalances the probability rate. Absolutely fine. For us, in our sessions, we do a minimum of 50%, again, just to keep consistency there, so we won't place that trade. We've got 3 more to look at, and then we might be, like I said, a little bit more lax. Not lax on the rules, but we'll just give it a little bit more room to find us more opportunities. Okay, so we've got one on the 2-day on this one, so we'll come back in a second. We've got one on the 3-day. So just to show you, same area on both the 2 and the 3-day. On the 3-day chart, it shows us a 57% chance of working. On the 2-day, it shows us a 55% chance of working. So we'll use the 3-day. So again, we are using objective statistics and numbers to tell us what we should be doing, not what looks best, not what we like the look of, not what we fancy, not what we have a bias towards, just which of those numbers is higher, pick that one. Do we have a UFO that coincides with the EMA? Yes, great. No, don't do it. It's really strategic, really methodical. Let's see if we've got room to the upside, which we do. So brilliant, we will be placing this trade. Again, it looks like we'll be placing this trade at market. So we are looking at SSYS, Stratasys, I think that's how you would say it. We're looking at a 3-day chart again. We often use the 3-day chart, not deliberate. We look across 4 different charts and we end up looking at the 3-day one quite regularly. So the entry will be current price, which is 24.46. The stop loss will be 21.30. So I'm taking this number here and taking off 10 cents. Our final target will be up here, which will be 31.84. So it's the first time we've got to this as part of the methodology. So for those that are new, I'll just pause here and explain why. We are buying this market because we have probability to the upside, buyers and buyers coming from that EMA price. So we've got lots of buying going on. What has the power to stop buyers pushing price up? Sellers, lots of them. So we get out just as those sellers start, just before. So if it's 31.84, we'll get out at 31.84. Maybe even a couple of cents less if you want to give it even extra room. This is what I was talking about earlier when we say where we objectively have the room to take the trade. At the moment, based on all of the criteria that we see, we have room for this trade to get up here before potentially those sellers start to push it back down again. So we'll put our target there. So it's 31.84. My entry price has changed a little bit there, so let's update that. Okay, our first target we'll figure out on TradingView because TradingView is very good in that way and allows us to do, of course, our calculations. As you can probably tell if you've ever watched me in a session, I'm not good at mental maths, so I'm very happy for TradingView to do it for me. So the entry price is whatever price is now, 24.47. Our stop loss is 21.3. Going at market, stop loss is 21.3. $50 risk. So I do $50 risk on each side of the trade, so $100 risk in total. Ultimately, it's up to you guys to decide where you want to put your risk or how much risk you want to put on a trade, because of course we're all going to have different account sizes. We're all going to have different meaning to us as to what is risky and what is not risky. So you risk whatever you want to risk. Place trades, don't place trades, do what fits you. Like I said, there's no need to place a trade just because I am, and there's no need to follow the exact risk parameters that I'm putting in either. I do an example of $100 in total and then half it just because it's a nice round, easy number to show as an example. So I've put both halves of the trade in, again, $50 risk on each, entry, stop, safety target, and final target. Let's put a little note in to remind us for next time. So place 25th of March, 1 week, 3 days. Don't need to write anything about the second target because we're already on, we already have our second target and we can see it. Okay, coming back to top, we only had a couple more on, let's have a look at this. Yeah, a couple more on our list and we'll see. So 20.82, that's what we're looking for here. Okay, we see this is a very decent opportunity there, and I'm referencing this number up here to have a look at that. Let's see about the other ones. Okay, great. So let's place this trade. So the reason I said this was a decent opportunity, a couple of reasons. We have a relatively small UFO. Now, just to pause here on a point. The smaller the UFO, the more likely you are to hit your target, your safety target. Because if the UFO is only 50 cents across, then it's only got to go 50 cents up for you to break even and be safe on that trade. It also means that wherever your final target is, it's probably a greater reward to risk ratio. So that's great. However, the smaller the UFO, the less probability. And the reason for that is because it has less room to be wrong, less wiggle room, because it's tighter in price range. So more likely the price moves through it than if you had a bigger UFO that's got room for price to come in and then come back out again. So pros and cons, but I'm happy with this. I think it's a reasonable sized UFO. We also have on this time frame on this market a 72.73% chance of probability, which is great. We have no sellers, which means we're going to have a trailing stop here. So let's place this trade. And again, just to tell you why we're doing it, thick blue dot, probability upwards on a weekly chart. Also on a weekly chart, we have an EMA of 20.82, which falls in here. So that EMA price, which is where people are likely to buy, falls within a green UFO, which is also where people are likely to be buying. So we've got buyers and buyers together in the context of a market that has probability to move up anyway. So with all of those things in hand, we will be placing this trade. Okay, so we are looking at, I want to say Twink, TWNK, 1 week, 2 day. We often place trades on a 3-day chart, but it's nice to be a little bit different. We're going to go in on a limit order today, so that's 20.96. Our stop loss is going to be 20.32, taking that lower number and rounding down 10 cents. And then our target 2 is going to be trailing. Okay, so we will find out our target 1 in a second. And before we do that, I'm just going to make sure that I've put that. Just remembered I didn't log what our T1 was on our other trade, so let me just go back and have a look at that very quickly. This one was 136. So this is a good example, actually. I'm glad I came back to this before we put this new trade on. Here we have quite a range, right? We had a $24 range rather than a 50-cent range. So what that shows us is that, yeah, we've got lots of buyers back to back in that area. Price then needs to move $24 in our favor for us to hit our safety target. So it reduces the reward to risk ratio of where our profit targets are. It also reduces the likelihood that price gets to our targets because it's got to go so much further to get it. But it decreases the likelihood that price moves through our area and then in our favor, and we get stopped out even though we were right. So pros and cons. Okay, so we were looking at Twink or Twink. Okay. And we had this area here. The entry was 20.96. The stop loss was 20.32. Here we go. We're going to go limit order, which means we're going to enter the exact price we want to buy at. In the last 2 examples, we've gone long at market, so whatever the price was at the time, because we happen to already be within that UFO. We're not in this case, and I kind of prefer it that way with limit orders. So we put it in to say when price or if price reaches this number, then buy for me. So if we get to that black line, which is 20.96, will be entered into the trade. If it moves against us and hits the red line and hits 20.32, we will hit our stop loss and therefore lose the trade. If it hits our black line and then this first green line, then we will, at worst, break even. So that's the first half of the trade. The second half of the trade in this case is a trailing stop. So we're going to do the same thing in the sense of the entry and stop are the same. The risk is the same. We just don't take profit. So then what happens is, let's say price comes in, hits our entry, moves against, or moves in our favor, sorry. Maybe it hits our safety target, maybe it doesn't. But then a new UFO is formed. We have a new buy UFO that forms here. Then what we do is we take that stop loss and we put it here. Then price continues in our favor and a new UFO is formed. And we take our stop loss from here and we put it here. So we're locking in profit as we go up because new UFOs have formed, showing us that there are more buyers being added to this situation. It might be that price just comes in, goes straight against us and stops us out, we lose. That happens. That's why we trade, right? We know that we're risking money in order to make money. It's not, unfortunately, we can't be right 100% of the time. We need to protect ourselves if we're wrong. Even the likes of Goldman Sachs are wrong about 10% of the time when they trade. So we are not going to be right 100% of the time when we trade. If we're wrong, we stand to lose our entire account if we don't use stops. So we use stops to lock that loss or lock that risk to a comfortable amount, whatever that number is for you in terms of amount of dollar risk or pound risk, euro risk, whatever currency. We use our stop losses based on where the UFOs show us we would be objectively wrong. If there are buyers in here, we think there are buyers in here, which is why we've placed that trade, and price moves against us, then we're wrong. By the time price comes through this area and hits the stop loss, We're wrong. There weren't buyers there. Not enough buyers to keep price up. So we get out objectively there. The distance between our entry and stop is objective, meaning if we're all following the same methodology, our entry and stop loss should be in the exact same place. Our safety target should be in the exact same place. Our final target should be in the exact same place. But the difference is where one person might trade 2 shares here. So 1 share on one half of the trade, 1 share on the other half of the trade. Somebody else might trade 200 shares, 100 shares on one, 100 shares on the other. Somebody else might trade 2,000 shares, 1,000 shares on one, 1,000 shares on the other. That's where we tailor it to be specific to our risk profile. Okay, so let me place a little note here. So this was placed 25th of March, 1 week, 2 day, and T2 was trading. Okay, now let's come back and just see. I'm just going to check here, see if we've got anybody on the chat. Anybody had any questions? Not so far. So let's have a look and see if we can place one more trade before we round off for the day. We have one more to look at on our list. So let's see. So this is 56.79. So kind of just below where we are now. So nothing on the 2 day, nothing on the 1 day. Nothing on the 144, close, but nothing on the 144. 3 day, nothing there either. So tell you what we do, because we do have a couple of minutes left. Let's be a little bit more forgiving with our climate criteria. And let us look at, I'm just going to click them at random based on ones I don't think we've looked at yet. So FOXA, 40.87. Nothing there, nothing there, nothing there, nothing there. I can't remember if we've looked at some of these, but let's have a look. Coal. Okay, nothing on that one. No, that one. It might be that we're looking at the same list anyway. She says, let me check. It's for a sensible one now. So sensible just means we're not right at the start, but we're towards the start. So if it usually goes up for 6 candles, we might be on candles 2, 3, 4. The early will put us on candle number 1. Late will put us towards the end of that. And then, so we see here, so we've got early, sensible, hopeful, and late. Early is candles 1 or 2, right towards the start. Sensible might be 3 or 4. Hopeful might be 5 or 6, and then late is anything after 6. Okay, but again, we want to trade sensibly, of course. I'm pretty sure we've already looked at a lot of these. I can't remember off the top of my head. So we might be repeating ourselves here, and it might be wasting the last few minutes that we have, but let's go real quick, see if we can find any based off of my brain, which is maybe not the best. Pretty sure we've done this one. I think VST is also new, so let's have a look at this one. 1 day. This was the one we couldn't trade because because the number was too small. VST, I'm pretty sure, is new to this list, so let's see this one. Brilliant, we have a trade here. That worked out perfectly. So we have thick blue dot probability upwards. Now, usually this market would go up for 5 candles. This is the 4th one. So within the usual movement to the upside, room for it to keep going up. We have an EMA number at 22.16, which is literally where this UFO starts. So brilliant, that works. We have sellers, but quite far up, so we've got some room to take this up there as well. So let's place this last trade. So this is VST, Vistra Corp. We are using a 144 minute in this case, which I have to say is not very common. We mostly end up trading the bigger time frames, but again, nice to be different. So just to show you as well, we also have a probability rate that's 55.93%. Okay, so the entry will be 22.16, the stop loss 21.82, final target 25.65, and then we'll find out our target one in a second. So we are looking at VST. Okay. Just drawing lines now, just to see what happens there. Okay, so the entry was 22.16. Stop loss 21.82. There we go. And this was on a 144. So we're going to go at limit again. So 22.16 is the entry. Stop loss 21.82. Risk $50. First target 1 to 1 away. So if I'm risking 34 cents top to bottom, then I'm risking that. Sorry, then I'll make 34 cents if I'm right on my safety target. So that's gone in. And the other half of the trade, same entry, 22.16, same stop loss, 21.82, same risk, and our profit target in this case was 25.65. That's a 10 to 1. Now, because we're taking our safety target, so we're taking off a little bit of profits along the way, if we were fully right on this trade, meaning price went all the way up there, then it wouldn't actually be a 10 to 1 overall. We'd probably average out about 6 to 1, 5.5 to 1, something like that. Okay, so that was the last trade of the day, placed 25th of March, 1 week, 144. We have placed 4 trades today, I believe we have. And next time we will come and see what happened with them. Did we win? Did we lose? How did we manage them? How might we have interfered in a way that fits our rules? Hopefully what this has done is given you an idea of how the methodology is applied to the stock market. Didn't matter which stock we looked at, didn't matter which time frame we looked at, we're following the same structure, the same methodology, the same apps every time. We want to know that we have probability up if we want to buy, probability down if we want to sell. If we didn't have probability in either direction, we do nothing. We then want to say, if we're buying, where are we going to buy? If we're selling, where are we going to sell? And we use UFOs to help us out with that. If we have green UFOs, they show us where we should be buying. We have red UFOs, they show us where we should be selling. To add an extra layer of probability to it, we add the EMA number in as well. The EMA number should coincide with the UFO. Whether we're buying or selling, the EMA number needs to coincide with it. We have extra rules, like making sure our probability rate is over a certain amount, making sure we have room to take it to at least a 1 to 1 away so that we can make a semi-decent profit out of the trade, things to layer on top of it. The more videos you watch, the more you'll understand the exact process start to finish. Any questions, you can email me, becky@tradewithufos.com, and there's also tradewithufos.com/Becky, which you can get here. From here, you'll get different apps and platforms at the top. You can book one-on-one coaching if you'd like to, or if you scroll down, you can log in for free and ask questions on here. Now, you might find that the questions that you have, somebody else has already asked, and therefore the answer's already there, or you might be doing somebody else that favor later down the line. Okay, today is Friday, so I will wish you guys a great end to your trading week, a great weekend ahead, and I will see you next week. Take care. Bye-bye.